Hi YouTube and welcome back to the channel Retail Investing and Trading. In today's video we will go over the exact rule of the engagement for the Gartley pattern. So stay tuned. And we are back. So let's dig straight into the content. Why am I creating this Gartley pattern video when the YouTube is full of them? Well, because I've seen a lot of them and I've seen that a lot of so-called gurus are not teaching the exact rules. They're teaching something which is close enough. I've seen people who are making some kind of profit, showing their profits and saying it's a Gartley pattern. When I go into a chart to check it out, it's actually not a pattern because it's not based on the exact rules. Because every harmonic pattern, Gartley, bat, cipher, crab, all of them have exact rules. Some people are trading those patterns when the price don't match all of the rules, which is wrong, and then they're calling it a pattern, which is not. Hope that makes sense. So I decided once for all to record a video with the exact pattern rules for Gartley so that you know how to trade it properly. So let me show you the rules first, okay? So here they are. Rules of the engagement for the Gartley pattern is identify the X point and impulse lag, okay? And then we have a bunch of fib retracement levels and fib extensions that needs to be matched, that price needs to hit in order for this pattern to be valid. And instead of me reading through all of these engagement rules, I want to show you this on a chart. Okay, so let me bring the chart here. There we go. So I will do this exactly as I did for the bat pattern. Okay, so first, what do we have is some kind of a X point, which is our starting point in the market. Okay, so this is it. Now we take the price probably moves up or down. I will show you the pattern bullish Gartley pattern. Okay, so it moves up and then it stops at some level and creates its A point. Okay, so let's bring the A point here. When the A point is created, price usually retraces a little bit. And then comes the first rule, okay? So we gotta bring up our fib level out. And we drag the fib level from our X point to the A point. And in the rules that you see on the screen, in your bottom left, I think, because I'm rendering the video afterwards, right? So I will put or right corner, I will put the rules here. So in the bottom right corner, you will see the rules. And it says that for the B leg, in order for A to B leg and B price point to be valid, the price needs at least move to the 61.8 level of fib retracement from X to A, but should not touch which price point? 78.6. Okay, so I added 78.6 and removed the 88. So in case the price doesn't touch the 61.8, we don't have a valid Gartley pattern. We might have something else, but the Gartley no. If the price touches 61 and trades within this here price zone, okay, between 78.6 and 61.8, we might have a valid Gartley. But if the price touches 78.6, then we don't have a valid Gartley pattern anymore. Okay, so in this case, we will assume that price it traded in between those two levels and it created its B point. So I'm gonna bring the text here and create a B point. There we go. So now we have X to A leg and A to B leg. Okay, and now we're gonna mark this like a lot of traders do with the triangle. Okay, we're gonna change the color into a green one and we will adjust the transparency. When that is said and done, let's remove our fib levels, okay? And now we need our C point. C point, if you check out the rules, needs to come added retracement. I gotta bring the white color back. Okay, added retracement, fib retracement from A to B. It needs to at least needs to touch 61.8, but should not violate the A point. So similar to the bat, but in bat we need to touch 38.2. So in Gartley we need to touch 61.8, okay? And if we close anywhere here, we are good. But if we spike a pip or half of a pip above the A point, we don't have a valid Gartley pattern anymore. So let's assume that we traded around here, okay? And now for the completion point, so we have X to A to B, B to C. So first, before the completion point, let me put the C level here. The completion point, instead of a fib retracement level, we need a fib expansion, okay, or extension. So we got to bring that tool up, and the D retracement comes at 127 from A to B, okay. So the completion point is at 127.2 from A to B fib extension. When the price comes here, I will delete the extension. I'll again use my triangle tool, create the D point, again mark it in green, sorry, and say that this is my D point. When the D point up, can I move it? I guess so, yeah. Okay, so we have our D point right there, and so let's say that we are triggered into a trade. Now we gotta set up our targets, which is basically the same thing, and I'm gonna teach you the conventional way of setting those targets. The same thing I did with the bat pattern, which is, by the way, the video for the bat pattern will be linked at the end of this video. And when I'm using this opportunity to say when the bat pattern video, I have to invite you to click that subscribe button, click a like button if you think this content is valuable and helpful to you, and make sure when you click the subscribe button to smash that bell button. We need to help the YouTube algorithm to rank our videos so that we can help as many people as possible, okay? So we have our decompletion point, we are in a trade. Now we gotta set our targets. Targets are conventional way, 38.2 retracement and 61.8 retracement from A to D, fib retracement from A to D point, which gets us to our rectangle tool. This is target 1, green color, okay. Then we will have a target 2, okay. And then as for risk, as for stop loss, as I said in the bat pattern, there are a bunch of ways to, set up your risk, whatever you backtested, whatever you feel comfortable with. But the thing is that some people are using some kind of the ATR here, ATR version of a stop loss. Some people are using 2-to-1 risk to reward, so you need to have a risk lower than your reward, etc., etc. Also, the conventional way of trading the Gartley pattern is same as the bat pattern. Basically, if the price starts moving against you in this case, like down below, trade, down below, you just basically drag your fib levels and then trail your targets, okay? Which means that you will, in case that the price comes all the way to here, you will adjust your target 1 to 38.2, and your 61 from target 1 to here. So then this here would be your target 1 level, and this would be your target 2. Again, these have pros and cons. Pro is your win rate will probably increase with these targets moving, but your risk to reward ratio will decrease. So depends on you as a trader, what do you feel comfortable with? That's how you're gonna probably trade this. So now what I want to show you is I want to go down to the charts, actually to do real price chart with candles, and show you and find a Gartley pattern with you on this video, so that we can wrap it up and hopefully you can go and trade it on your own. So stay tuned. We are coming back. And we are back. Okay, that was pretty quick. I had to pause the video and now restart it just to find a Gartley so that I can show you in the example. Okay, so here it is. So I'm not gonna, it's a little bit different than the bad thing because I want to move candle by candle and show you how it is actually while trading it live. So let's assume that these candles are being printed one by one. We are on our one time frame on euro dollar and the candles are being printed. Okay, so we have something that might be our potential X point, right? Here it is. This is the potential X point. So, and then here, as you can see, price starts to retrace a little bit. Yes, so we move down, it retraces even more, and then it goes up. So what do we have to do? We bring our fib retracement tool and we drag it, okay, here. And now if you take a close look to this, you will see that the price hit the 61.8 level, as you can see here, 61.8 level, and started retracing back. It didn't hit our 78.6. So that means that we might have a valid X to A and A to B point. Now we have to see what's going to happen with B to C point. Okay, so let's move forward. We are moving forward and it's very hard to see here, but okay. So here I had to move a little bit forward. We see that the C point it's almost touched the A point, but it didn't. So, and then the price started retracing down. So what do we have here? We have X to A to B, B to C, and probably we are gonna get the completion point. So let's mark this up and remove our fib levels because we have three valid points, okay? And I'm gonna use my triangle tool again. Here, here, just gonna, okay. And now before we have our XA B to C, but we don't know where the D point is gonna go. Okay, but I put it here, and now we're gonna see where is the D point coming. So for the D point, we said that we need to look for the extension of 127.2 of Fibonacci of the leg from A to B, which would be this leg here. Okay. And then we can see that our decompletion point is at a price level of 1.13771. So let's put our horizontal line here and let's see where we're gonna get triggered. Okay, I'm gonna increase it for you to see and change the color into, okay. So when the price comes to this level, if we were to trade this live, we would be in a trade, okay? So let's move candle by candle. Up, almost there, not quite, but we are almost here. Up, nope, not yet. Boom. This candle right here, if you can see it, I'm gonna drag it a little bit. Activated our trade, right? So at this point here, we have to set our targets, okay? So we pick up fib retracement and drag it to this candle. But as the candle move against us, we put the fib level all the way to the downside, okay? So the target, let me change the color to white so for you can better see. And now the first targets are here. So I'm gonna take the rectangle tool, set it from here, and take another one for target 2, put it here. Okay, and now I'm gonna take a risk level and put it right around here roughly. Again, risk is totally your thing. People are using a bunch of different stuff, ATR, RSI, fixed amount of pips, whatever you use is good, but you have to backtest it. Now let's see, is this Gartley gonna win for us? Okay, price started moving up, but it moved against us a little bit more. So we have to move the fib levels, okay? It reduced our risk to reward, but we will adjust it. Okay. Okay, there we go. So let's see. Up, target one hit. Guys, we have our targets one hit. Target one is here. We got it hit based on this candle. Okay, so now we're looking for target two. Boom. Target two got hit. So we have one winning Gartley back tested, and if I were to back test this, I would actually write all of these price points, my stop losses, and mark this as a win. That's a short lesson here on back testing. That's how you actually back test. Moving candle by candle and seeing what's the price gonna do. But yeah, this is a Gartley video. So basically that was a Gartley pattern. This one was profitable. I mean, if you were to trade it live, you would probably got hit both targets and you would, make some pips, which is 28 pips plus this 59, which is roughly, I don't know, 90 pips. Okay. Depends on your risk. Could be a lot of money. With that being said, hopefully you liked the video. If you have any sort of questions, please comment below. I'll try to answer as soon as possible. And if you want me to record any other lesson based on anything else, please also hit me up down in the comments and I'll try to record that Forex lesson. With that being said, click that like button, click that subscribe button, and smash that bell button. Thank you very much for sticking till the end of this video, and talk to you soon. Bye bye.